Raghuram Rajan spoke to CNBC at the sidelines of the IMF World Bank meeting in Washington on a whole host of issues from global growth to emerging markets to even protectionism. So here's Rajan with his take.
This is the first time in a long while we've seen all the big engines firing at the same time, including the large emerging markets. So it does portend well. We've seen trade picking up. We are seeing early signs of investment intentions. Of course, there are always clouds, and there are clouds this time also.
Want to pick up on emerging markets. I know you can't talk about India specifically, but the big fear after the U.S. election was that emerging markets would be a bad bet on rising protectionism, a stronger dollar, a resurgent U.S. That seems to have reversed.
Well, the good news is some of the fears about the administration that it would move immediately to a more protectionist stance haven't played out. There have been noises, but of course, the strong action that some people feared against Mexico, against China, hasn't really materialized. That's been good news. I think the other side of it, the bad news, has been some of the measures the administration proposed, such as tax reform, such as big infrastructure spending, looks a little further out in the distance. However, with the U.S. economy as strong as it is, perhaps we don't need that as quickly.
Is it strong? I mean, we're not seeing much in the hard data. Certainly the first quarter was weak.
Not growth numbers, but certainly employment numbers. This is an economy which is as close to full employment as the past would suggest. So how much more room is there for additional stimulus? So when I say strong, it is relative to potential. Would we want potential to be much higher than it is now? Of course. But we're pretty close to where potential is.
When you say there are clouds always, people pay attention, especially from you. Your famous speech back in 2005 in Jackson Hole warning of financial risks in the system, very prescient. Where do you see the risks right now?
Well, the most immediate is, of course, as monetary policy normalizes, we will see more stress on heavily indebted entities. And the question is, who is heavily indebted? Well, if you look across the world, you see some countries with very, very buoyant housing markets, which haven't really stopped since the crisis. And so the worry is, as interest rates move up, do we see some kind of housing impact in those countries? Also, even in the United States, you have spots of extreme leverage. We saw that with the energy companies, the shale drillers, but there are also places like student loans, where you see a high level of defaults even at this point. Could those get worse if, in fact, interest rates move up? That's a big question.
What about overall market complacency, the fact that volatility is so low in the face of geopolitical risks and economic risks around the globe, even if things are getting better?
Absolutely. That is another risk. There's a lot of policy uncertainty right now because of what the administration is going to do and how much it can achieve. But also there's geopolitical risk. We have a bunch of strong leaders around the world who are already well entrenched in their strength, and we have a bunch of new leaders who need to prove themselves that they're strong. And in that kind of environment, who has room to back off if, in fact, there's a confrontation? We have many areas of confrontation.
Why do you think the market's not afraid of that?
Well, I do worry that the market seems extremely complacent. We don't know why. The VIX is, as you said, at an all-time, at a low.
Historic lows.
Given the level of policy uncertainty, maybe we should be fearing a little more.
Finally, what would you tell a U.S. audience, U.S. investors, about the French election coming up this weekend, with potentially two extreme candidates emerging as frontrunners?
Well, we certainly know on Sunday. There is a huge amount of uncertainty since our polls on how people behave in this new normal don't seem to be very accurate. So what exactly emerges, certainly it could be very, very different from what people think.
Risk to the U.S. stock market as well.
Risk to Europe, risk to the U.S. as a result.
Okay, that last one is